If you're waiting for the market to feel safe again, you're already too late because while fear is flooding the headlines, smart money is buying in what retail is dumping. The tech isn't collapsing. It's actually being handed to you at a discounted rate. And today I'm showing you 5 companies that could define the next decade of your life in growth portfolio. Over the next 2 weeks, we've seen nonstop volatility, Supreme Court decisions looming on trade, aggressive tariffs shaking up global supply chains, a government shutdown that pushes the economy to the brink before reopening. And here's the truth. Smart money feeds on fear, but for the disciplined investors, this market isn't a crisis. It's a fantastic buying opportunity. And today, when we discuss the 5 companies that could really turn your portfolio into a massive, good year and great decade. Tech has been pushed into a corner, and history is pretty clear. You don't buy when the sun is shining, you buy when there's blood in the streets and there's fear in the markets. When there's fear, there's headlines that are terrifying, there's people screaming, when fear is peaking, that's when headlines are the strongest. That's when people fear the most. People freeze, they make trades. So today we're moving past the panic into logic and where we actually follow the plan where DCAing gets you long-term wealth. And I'm going to show you 5 powerful companies that are going to be unfairly discounted for you to add your delegation. Now remember, this is your portfolio, so I can't do the due diligence for you and test out your risk levels. These are my picks that I am currently adding into my portfolio. I've purchased over $12,000 in these companies just this week. So before we dive in, let me introduce myself. I am Jonathan Little. I record videos just like this for you guys to help you guys out. So without any further ado, let's jump into the iPad. So this is something you should really consider in terms of psychology before I talk about these companies. It's that when we're talking about growth companies, there's a different risk level associated to it. And the companies we're discussing today are typically on like the 3 to 4 risk scale out of 5, okay? And so they're more of like mid caps and some small caps in there, not like the Googles and the Apples. This is growth positions. This is something where you want to grow your portfolio. Maybe you have $100,000 invest in your portfolio, and this is what you would put maybe $20,000 towards to really grow the portfolio at an exponential level. Yes, for the past year, I've been purchasing tons of shares in stuff like Microsoft, let's think of a few, Wayfair, Affirm. What are some other ones? I mean, there's lots. I just can't think of them on the top of my head right now. But this is really on a lower risk level, those companies, to which I consider. To you, they might be a little more risky. So when you consider the risk level, just make sure to gauge that in your portfolio. So let's get into it. The first piece, and what am I doing? I'm buying more. This is what I do when the market dips. We're always going to have normal volatility curves. And let's say that's your position. I'm always buying the dips anywhere within and throughout here. I'm buying. I don't sell in these times, I buy. And when there's here, I typically trim, take some profits, shift into different positions, diversify the portfolio. So let's jump into it. So number 1 is Hound. Hound is a pure play AI leader in voice artificial intelligence. What this means on a dumbed down level is that when you are typing out something, instead of you reading it, it speaks it out to you, which is becoming common in vehicles, especially online. This means that brands keep their identity without handing customers data to big tech. They're Amelia and an Enetic platform. This tech is pretty powerful. It's built on nearly 2 decades of speech recognition breakthroughs. That's why major companies choose Hound instead of being locked into other big tech ecosystems. It's very, very flush and fluid. You're not locked in at all. So let's talk about the numbers in Hound. In their most recent Q3 earnings, Hound beat EPS by over 50%. And they report earnings again pretty soon in February 26. So momentum is pretty strong with the companies. This isn't exactly an earnings play, but you're able to get in before the earnings to take up on some upside as long as obviously the earnings go great. Their CEO, Kevin Mohager, I think it is, Mohager, not sure how to say that exactly, has shifted the company towards high margin subscriptions and royalty models that are highly beneficial to their bottom line, which we'll jump through in just a second. Analysts are responding with pretty high price targets of $26, which is pretty good. 12-month average is around $16. So you could see resulting in potentially doubling over the next year. So Hound isn't just a hype stock. It's infrastructure to allow those AI and the computing softwares to use text to voice in practical models like vehicles. If every device eventually talks back to us, then Hound is going to be a very important infrastructure and tool on everyday lives. And I think you can profit from it. Number 4, Celestica. The ticker is CLS. So let's switch to that one here. Celestica is no longer just a electronics manufacturer, which it's been for a while. So there are major forces in the AI data center and scalar infrastructure. What this means is they build high complexity networking and computing solutions. So this includes things like an 800 gig switches, an AI ML clusters, sort of things like that. The hyperscaler business grew over 66% per year, which I wrote down right there. And they grew year over year. They're not just building parts, they're building physical foundations of AI. Q4 earnings, EPS beat that by 10%. Revenue was up by 44%, which is amazing. And their CEO is Rob, raised their 2026 revenue outlook by $17 billion. This stock is definitely a silent climber that I think for a while people will definitely leave out of the situation. Just like we talked about earlier, their mindset will be, oh, there's a bit of fear until it's too late. And then they'll want to jump in and wonder why they missed out on all the profits. I look at the companies all day, guys. This is exactly what you see in a good company fundamentally starting out and building its piece in the marketplace, carving its path. A great one to add to your portfolio. Number 3 is NVTS. Let's switch over to this one. This is the first time I'm talking about this one on the channel. I purchased some of this stock a few months back, actually. It did pretty good. Obviously some ups and downs, but NVTS is a global leader in next generation power semiconductors. So parts like gallium nitride, silicon carbide equals faster charging, higher efficiency. Your daily life, think of everything you use for electronics, your laptop, phone, your computer, your AirPods. They all need to be charged. And this is what parts help actually get that solution to the marketplace. They basically power green energy, AI data centers, electric vehicles, and they're pivoting pretty aggressively towards renewable energy. And so they hold $160 million in cash, which is great, and with zero debt, which makes this a very safe company in case there are fluctuations in the marketplace with a great amount of capital. Projected is 700% revenue growth for 2026. So there is definitely some really strong projections. This has high volatility, but a high upside to be able to swing trade this, keep it for a little bit, and then sell it obviously on those dips. So this stock, although it is volatile, it's more at the bottom of the cycle, which is a good time to dollar cost average into it. And really, efficiency is the future of electronics. So if you believe that, and you believe that you're going to keep using devices, which you should all believe because we are all going to keep using devices unless the world ends and there's no more Wi-Fi, then you should consider adding this to your portfolio. Number 4, SoFi is absolutely amazing. Let's talk about this. Obviously, we just had a fantastic buying opportunity a couple days ago. If you didn't have the chance to get into it, definitely consider adding it to your portfolio. And here are the reasons why. This is a fintech company in the financial services. They secured a bank charter, which means they're lowering their cost of capital and boosting profitability. Once users join SoFi, they typically stay, which means a longer and more profitable lifetime value of a customer. When they sign up for credit cards, savings, investing, mortgages, they tend to pivot into other things, just like insurances, different aspects of their life. That once they sign up and use SoFi, they typically stay and require more services from them, which increases the profit and bottom line of this company, which increases the money in your pocket if you own SoFi. So the flywheel is pretty powerful with this company. Q4 earnings, pretty sweet. Revenue is up 37%, first full year of GAAP profitability. Their CEO issued guidance that crushed expectations, which was amazing. And then despite that, the stock did pull back, which was a few days ago when there was that buying opportunity. I hope most of you got in on that. And that's when I got in on it. Absolutely amazing discount. Obviously, fair value is between like 26 to 30. So if you had a buying opportunity at 20, absolutely take advantage of it. That is fantastic. And this pullback is more of a gift. And that's the way you got to think of it, is instead of it being a burden and something scary to think about, no, this is a great thing for your portfolio. Take advantage of this. Soak it in. Want to get this profit too. And the last one, which I think is the best, my number 5 pick, is Applied Digital. Now, this stock is the tip of the spear for AI infrastructure, and I'm going to explain to you why. So this stock and the company designs, builds, and operates data centers. And you might be thinking, that's a pretty important thing nowadays, and you're 100% correct. And they just secured they recently secured a $5 billion 15-year lease with a US hyperscaler, which is absolutely amazing. They also partnered with CoreWeave. They aren't in AI. They're more of a landlord for the AI. I mean, they're a done-for-you service for designing, building, and operating data centers. So their revenue last quarter was up 250%. Absolutely amazing year-over-year growth. They beat estimates by nearly 40 million, and they hold roughly $2.3 billion in cash. So that could be a big, large shovel towards their next projects and increasing this revenue over 2026 and 2027. 600 megawatts under construction, which is absolutely ginormous, and then a roadmap to the first 5 gigawatts. This is really an AI factory play, isn't so much the infrastructure of Hound. This is the actual landlord of it. And so while markets are panicking about these positions and AI, they're just building their positions. And I recommend you guys consider do that too, because you can make a ton of money in this market. So let me leave you with these thoughts. If you had in the range of between 100 to 200K, here is what I would first keep dollar cost averaging into good growth stock companies. Things like Applied Digital, things like NVTS, positions that can actually grow this. Guys, to retire nowadays, it's estimated that you're going to need between $2 to $2.5 million, especially if you're in your 20s like I am. You're going to need a lot more than that by the time you're ready to retire. With this 100 to 200K, if you just go the normal S&P route, you're not going to make it there, or it's going to take a long time. You're going to have to invest a lot more money. These are some growth opportunities to invest a little bit into these high growth companies and then slowly trim the profits. And that's exactly what I teach in my group and on my channel. So if you guys like that information, if you like the sound of growing your portfolio in a good way, subscribe. I would love to grow the channel. I'd love to help you guys out in your portfolio journey. I hope to see you guys soon on the next video. Take care, guys.